Welcome to the final chapter of the accounting cycle in Accounting Basics. In this video, we will look at the last two steps, the trial balance and the financial statements. In the trial balance, we take the final balances of all the accounts from the ledgers and bring them together in one place. The trial balance has three columns, one for the account names, one for debit balances, and one for credit balances. Each account balance is entered on the correct side. For example, if we look at the ledger account of J as a supplier, he is a trade payable. Since trade payables are liabilities, the final balance of 120 is taken from the credit side of J's account and entered in the credit column of the trial balance. However, if J is a trade receivable, the balance would be entered in the debit column of the trial balance. In the same way, the final balances of all other accounts are entered under the appropriate debit or credit columns. This makes it much easier to prepare the financial statements, as all the account balances are available in one place, instead of having to scour through individual ledger accounts. Once the trial balance is prepared, the figures are then taken to the financial statements. At the Edexcel IGCSE level, students need to be familiar with the preparation of two financial statements only: the income statement and the statement of financial position. When preparing these statements, it is important to note which accounts belong to which statement, as each account appears in only one of the financial statements. The allowance for irrecoverable debts appears in the statement of financial position, where it is deducted from trade receivables to show the amount expected to be collected. Accounts such as bank, drawings, and equity all appear in the statement of financial position. Inventory needs special attention. Opening inventory appears in the income statement as part of the cost of goods sold, while closing inventory appears in the statement of financial position as a current asset. Motor vehicles at cost appear in the statement of financial position as non-current assets. Motor vehicle depreciation, shown as accumulated depreciation, is also recorded in the statement of financial position and is deducted from the cost of motor vehicles to calculate the carrying value of the asset. Office expenses, purchases, and revenue appear in the income statement. Trade payables are liabilities that are shown in the statement of financial position. Understanding where each account belongs is essential for correctly preparing financial statements and for scoring well in your Edexcel IGCSE exams. Now we move on to the preparation of financial statements. We always begin with the income statement. The income statement starts with revenue, which in this example is $80,385. Next, we prepare a separate section called the cost of goods sold. The cost of goods sold section begins with opening inventory, which is $15,000, followed by purchases of $45,920. I should also mention that closing inventory is usually given as additional information. In this case, the closing inventory is $23,000, and it is included in the cost of goods sold section after purchases. Before moving any further, we must first calculate the cost of goods sold. The formula is opening inventory plus purchases minus closing inventory, which gives us a cost of goods sold of $37,920. We deduct cost of goods sold from revenue, which gives us gross profit $43,465. After calculating the gross profit, we move on to other expenses. In most questions, you will find many other expenses listed separately, such as general expenses, office expenses, salaries, and so on. For this example, I've only included office expenses, which total $16,780. We then deduct the office expenses from the gross profit to arrive at the profit for the year, which is $26,685. After completing the income statement, we move on to the statement of financial position. This statement begins with non-current assets. Non-current assets are assets that the business expects to use for more than 1 year. In this example, motor vehicles are a non-current asset. To record motor vehicles, we first show the cost of the motor vehicles. Next, we show the accumulated depreciation. We then deduct the accumulated depreciation from the cost to calculate the carrying value. Here, the calculation is 50,000 minus 25,000 equals 25,000. This means the carrying value of the motor vehicles is 25,000. The amount that appears in the statement of financial position is the carrying value. Next, current assets, the assets that remain with the company for less than 1 year. In this question, the current assets include bank of 3,000 and inventory, which is the closing inventory of 23,000. We are also given an allowance for doubtful debts of 750. Normally, the allowance for doubtful debts is deducted from trade receivables. However, in this question, there are no trade receivables shown. Therefore, the allowance is deducted from the total current assets. To calculate total current assets, we add the bank balance and inventory, and then deduct the allowance for doubtful debts. 3,000 plus 23,000 minus 750 equals 25,250. So, the total current assets amount to 25,250. Next, we add the current assets to the non-current assets, which were 25,000. This gives us the total assets of the business. After total assets, we move on to the equity section of the statement of financial position. In the equity section, we start with the opening capital, which in this example is 60,000. From this, we deduct drawings of 10,000 and then add the profit for the year, which we calculated in the income statement as 26,685. So we are basically calculating the closing capital, or closing equity, using this simple formula. Opening capital minus drawings, plus profit equals closing equity. Next, we move to non-current liabilities, such as long-term loans. However, in this example, there are no non-current liabilities, so we can skip this section and move straight to current liabilities. Under current liabilities, we only have trade payables, which amount to 3,515. So, we list the trade payables under current liabilities. Now, to complete the statement of financial position, we add together the closing equity and the current liabilities. This gives us a total of 8,200, which represents total equity and liabilities. Ideally, the total assets and the total equity and liabilities should be exactly the same. In this example, they don't match because the numbers were randomly selected, just to show you the format and structure of the statement of financial position. In future videos, we'll go through a complete example using a proper trial balance, with correct figures, so you can clearly see how total assets always equal total equity and liabilities. And that brings us to the end of this video on trial balance and financial statements. If you found this explanation helpful, don't forget to like, share, and subscribe so you don't miss the next video. In the upcoming lessons, we'll work through full exam-style questions